Conquer the unexpected, your guide to a bulletproof budget. Tired of financial surprises throwing your life into chaos? You are not alone. This video will equip you with the tools to build a budget that not only handles the everyday, but also prepares you for the unexpected, giving you the financial freedom you deserve. Unexpected expenses are those sneaky costs that pop up and threaten to derail your financial stability. They're the curveballs life throws, and without a plan, they can lead to serious stress and debt. Think of them as financial potholes. You can't always avoid them, but you can prepare your car, your finances, to handle the bump without a flat tire. Examples of these unexpected expenses are everywhere. A sudden car repair, a hefty medical bill, or urgent home maintenance can all throw a wrench in your plans. Even worse, job loss can create a significant financial strain. These events can happen to anyone, regardless of income level. Ignoring the possibility of unexpected expenses is like driving without insurance. You might be fine for a while, but when something goes wrong, the consequences can be devastating. This can lead to financial stress, making it difficult to focus on your goals and enjoy life. Debt accumulation becomes a real threat, trapping you in a cycle of borrowing and repayment. The constant feeling of being caught off guard is exhausting. It's time to take control and build a financial safety net. The first step in building a budget for the unexpected is to identify what those potential surprises might be in your life. What are your specific vulnerabilities? Brainstorming specific to your life is crucial. What are the unique risks you face based on your lifestyle, location, and assets? Consider your individual circumstances. Are you a homeowner? Do you have a car? Do you have any pre-existing health conditions? Think about factors like your car's age and condition. An older car is more likely to require repairs than a new one. The condition of your home is also important. Older homes often require more maintenance and repairs. Your health history is another key factor. Pre-existing conditions can increase the likelihood of unexpected medical bills. Finally, consider your job security. Is your industry stable? Are there any potential risks to your employment? It's important to be realistic when assessing these risks. Don't underestimate the potential for things to go wrong. Consider various scenarios, even unlikely ones. What would you do if you lost your job? What if your car broke down and needed major repairs? An emergency fund is your first line of defense against unexpected expenses. It's a dedicated savings account specifically for those "oh no" moments. The purpose of an emergency fund is to act as a buffer against unexpected costs. It prevents you from having to rely on credit cards or loans when emergencies arise. Determining the ideal size of your emergency fund depends on your individual circumstances. There's no one-size-fits-all answer. But even a smaller emergency fund is better than nothing. Start with a smaller goal, like $1,000, and gradually increase it over time. There are several strategies for building an emergency fund. The key is to be consistent and make it a priority. Set aside a portion of each paycheck, even if it's just a small amount. Every little bit helps. Consider selling unused items. That old guitar in the attic or those clothes you never wear can be turned into cash for your emergency fund. Explore a side hustle. A part-time job or freelance work can provide extra income to accelerate your savings. Consistency is key. Make saving for your emergency fund a regular habit, just like paying your bills. A budget is your roadmap to financial success. It helps you track your income and expenses, identify areas for saving, and allocate funds to your emergency fund. Budgeting allows you to track your income and expenses. You'll know exactly where your money is going each month. It also helps you identify areas for saving. You might be surprised at how much you can cut back on unnecessary spending. And most importantly, it allows you to allocate funds to your emergency fund. This ensures that you are consistently building your financial safety net. There are many simple budgeting methods you can use. Find one that works for you and stick with it. The 50-30-20 rule is a popular and easy to understand method. It allocates 50% of your income to needs, 30% to wants, and 20% to savings and debt repayment. Needs are essential expenses like rent, food, and transportation. Wants are non-essential expenses like entertainment and dining out. Savings include your emergency fund and other financial goals. Debt repayment includes credit card bills and student loans. Regular review and adjustment are essential for a successful budget. Your financial situation will change over time, so your budget needs to adapt. Ensure relevance to your changing financial situation. As your income increases or your expenses change, adjust your budget accordingly. Building a budget for the unexpected is not a one-time task. It's an ongoing process of review, adjustment, and proactive planning. Continuous review and adjustment are crucial. Don't just set your budget and forget about it. Regularly review your budget to ensure it's still meeting your needs. Are you still on track to meet your savings goals? Adjust your savings goals as needed. If you've reached your initial emergency fund goal, consider increasing it or setting new financial goals. Reassess potential unexpected expenses. Are there any new risks you need to consider? Ultimately, proactive planning leads to greater financial freedom. You'll have more control over your money and more opportunities to achieve your dreams. Ready to take control of your finances and build a budget that protects you from the unexpected? Start today. First, calculate your monthly living expenses. This will help you determine the ideal size of your emergency fund. Next, create a simple budget using the 50-30-20 rule or another method that works for you. Track your income and expenses for a month to get a clear picture of your spending habits. Then, set up a dedicated savings account for your emergency fund. Automate your savings so that a portion of each paycheck is automatically transferred to your emergency fund. Finally, commit to reviewing and adjusting your budget regularly. Make it a habit to check in with your finances at least once a month. Don't wait until disaster strikes. Start building your financial safety net today and enjoy the peace of mind that comes with knowing you are prepared for anything. Your future self will thank you. For more details, visit our website www.mudrafinvest.com. Please like, share and subscribe to our channel.